Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only.
Hey, everybody. So we've got gold that's been very, very strong lately. And of course, the digital gold version of that, which is Bitcoin in many people's minds, is starting to act a little bit better again lately. So we saw basically it was when things were sort of risk off, we saw a pullback in gold. So here's a chart going back a little ways. This is using the IBIT instead of Bitcoin. So we can see that last year we saw Bitcoin have a big run early in the year and then kind of peter off a little bit and go sideways, basically closer to the election. And gold marched steadily higher that entire time. Then election time was the big Trump crypto push that really drove Bitcoin through the roof, and gold sort of went a little bit sideways. When crypto topped out, gold resumed its upward trend. And then eventually Bitcoin started to pull back, especially into the risk-off environment that we've seen in the last 6 weeks or so, which has been sell everything that isn't nailed down, and Bitcoin was a little bit of a part of that. So we got into the 70s again, which I was talking about earlier in the year. That could very well happen. And not that surprising because in a liquidity event, they usually sell everything. However, I would have thought that they would have been a little bit more aggressive on gold as well. Gold tends to do poorly in the initial big sell-off in stocks because it's a sort of liquidity-driven type of thing when everything correlates to one. That initial ugly sell-off that drove us to VIX 50 plus, 60, perhaps close to 60, this time around is the kind of environment where everything correlates to one and there's really very few places to hide. So Bitcoin was not immune, although I'd say it sort of hung in there relatively well, dipped into the 70s, but came back fairly quickly. Now we're starting to see a little bit of a rally and catch-up trade in Bitcoin itself. So you can see since really the election, we had Bitcoin far outperform gold, and then gold start to really slowly but surely, almost like the tortoise and the hare, just kind of. Hey everyone, if you haven't subscribed to the channel, please do, and be sure to download my free Options Cash Flow Blueprint, a step-by-step guide for how to go from complete beginner to Options Ninja. Now back to the video. Ignore what digital gold was doing and march upwards, and lately it has gone more or less parabolic. We've seen gap, and now Bitcoin is starting to go as well to reflect the reality that gold may be talking about as well, right? Which is cheaper dollar and political issues, etc., global issues, things lately. So it's acting a little bit more like that hedge that it is sometimes billed as, and it's happening. So we have a strategy in our community, which is crypto income. Okay, so it's getting a little pixelated here, but you can see it. When the IBIT was at 5060, I noticed that the implied volatility was exceptionally high. I pointed this out in the community. One astute trader noticed that as well, versus 𝐸𝐵. So 𝐸𝐵 movement is in the blue, and we saw that we had this big volatility risk premium, the sort of positive carry to theta trades in Bitcoin. We can see that sort of created this opportunity. So I went in there, put on the income trade, sold some at-the-money calls with IBIT at 5060, and waited for that to play out. Now, Bitcoin had a little trip here and there and everywhere, but has come back now. And so this position expired last week. So I collected the 8.3% for about 6 weeks of work, which is great. That's really what you're trying to do in this sort of scenario is grab that compelling option harvesting opportunity. And we did. Now, when we look at it now, we can see that realized volatility, meaning actual movement, is quite high. In fact, it's higher than underlying option pricing. Now, any of you who follow me know that this isn't the only thing you watch. You don't just watch volatility risk premium. Are options expensive? Are they cheap? Where are we within the scope of the last 52 weeks? There's so many other things to take into account: direction, overall market, other risk gauges. So there's a lot going on there that you want to take into account. But what I will say is that right now it's not looking that great in terms of a sale. I think option prices certainly up to maybe a week and a half ago were extremely low, and that's why I've actually had a long position in MSTR options right now because I think they're very low given what could happen. And the actual movement, the realized movement, sometimes called historical volatility, realized volatility, those are interchangeable, is very, very high. And given what's going on in the world, and the sort of headline risk we're experiencing, I think there's some names where if you find that really low option pricing, they can look interesting. Given we can see that, in addition, we can see Bitcoin starting to go right. So we see this sort of breakout above this line here. So this is where the options expired. I collected my 8.3%. Now we're bouncing up into here, and we're observing that into a very weak overall S&P, we can see Bitcoin holding some strength. On top of that, I'm not getting the high level of option pricing that I'd like to see, and not to mention that there's a negative carry, negative volatility risk premium. And so this is lining up for me to tell me that, look, I don't think it's a great time to sell options in here. If you're very, very bullish on Bitcoin, I haven't looked at the skew, but it's quite possible that maybe some put sales or verticals could make sense, something like that. But in terms of my approach to holding IBIT, which is what I basically own now, I'm not compelled to really, really sell things right here. Now, here is one last piece of the puzzle that I wanted to show you. This is global M2 versus Bitcoin, right? So if some of you have been following these MSTR trades and coin trades that I've been doing since the fall, you can see that this was sort of a big reason as to why I started to get very interested in these names again. This is what M2 tends to do. It kind of peters out. A longer term chart will really show you how you often see these periods of consolidation before the next move, whichever way it is. And so Bitcoin tends to really follow this. Look at how it's following it very well. So now we've had a pullback in M2, which was also a headwind for Bitcoin over the last few weeks. But now we're starting to see a pickup in global money supply again. So the idea is that if this correlation continues, we could very well see Bitcoin start to march upwards and do very, very well again. Could happen, right? No guarantees. And this is just for educational purposes, but if this correlation continues to hold true, this could be a very, very interesting time, particularly if you want to start playing now I have some mentoring students who we've been talking about. They've been putting on some upside positions, upside skew, not very expensive in things like MSTR, inexpensive options. So if you want to express your view to the upside, there are some very interesting ways to do it, depending on what skew is doing, what implied volatility is doing. Interesting setup here, and we'll see how things work out. But for now, I think I'm just going to sit tight. And if we do drop back down below some technical levels, that may compel me to start putting on some hedges again. There are a number of them that I typically use. But for now, I think I'm going to take the money and run on that position and wait for some other kinds of edge to present themselves. Right now, I think the edge is in just staying long Bitcoin, or if you want to use options, I'd use call spreads, I'd use upside calls. The skew is not very expensive. You look at like 3-4 month calls on MSTR for like $40, slightly out of the money. That's just not expensive to me. So hopefully you guys enjoyed that, and we'll see you in the next video.